What's going on, guys? Let's take a little look at Apple and kind of see where the stock price could be headed. So one thing that I do kind of want to point out and make very, very clear to everyone who is viewing this video, guys, we're in a bear market. I think everyone knows that by now. One thing that I do want to stay cautious of, especially for newer traders, if you're an investor, maybe this doesn't really apply to you, but if you're a trader, for example, you have to really stay patient or be very, very disciplined. And what I mean by that is, on a day like today where we kind of gap down, find a little bit of support, and then after that first hour candle stocks start to rally, you can definitely take scalps to the long side, but just understand that does not mean this is the bottom. I see a lot of people start saying, well, this is the bottom. We're going back up. That was it. We found support. And then 1 hour later, stock is all the way back down. That's what's going to happen in a bear market, guys. The bull rallies are going to be very, very aggressive. However, they're normally going to get rejected somewhere on the hourly time frame into hourly supply. So if we kind of look at Apple here, we got that nice gap down and that flush through 140. I kind of spoke about this yesterday on one of my videos, or someone on Twitter I was talking to. They were saying, well, where potentially could Apple go? I said 141 is the next stop, and I'll kind of show you where I got that number from in just a second. But 141 was the next stop. We obviously went down just a little bit tad below that at 140, and then we got that aggressive bounce. You can see exactly where we stopped. All of these crazy lines on my chart are not just here because, I like to pull out the crayon box and draw all over my screen. These lines are telling me where buyers are stepping in, where sellers are kind of hanging out. And you can see here in the pre-market session, 1, 2, 3, 4, 5. And then when the market opened, 6, 7 candles of hourly candles, all were rejected here. This is a supply zone, guys. This is telling you here, this is resistance. This is telling you we got reload sellers in this area here. Stay cautious. If you're looking to go long, yeah, this green candle is enticing. Of course, you could catch, some scalps up along the way, but you have to be taking profits into this supply zone, especially when you have this much resistance here. And it was also yesterday's lows that we kind of, where we stopped yesterday. Always remember that an area of support will turn into an area of resistance the next time it is tested. The only time that becomes invalidated is when we get back over that area and we start to build. For Apple's case, Apple really needs to get back over 147 before it even has room to stretch. And even with that, it's only got about $2 room up to 149 and 150, which is a 50-day moving average on the 1 hour time frame. So one thing to kind of keep in mind, bear market, big bull rallies, look for them to get rejected. You can always take a short position off of that support. What's your exit on that short position? Well, if we get back over this area that we're using as our ceiling here, Apple was to break this level here of around 146, 147, then we just get out of the trade and we consider it, a failed move. Until then, we could have essentially ridden this all the way from 146 all the way back down to around 142, which is a $5 move intraday on Apple. That's a fantastic move. Now, as far as where the stock can go, we're going to need to see a little bit more data here. What we do have is a little bit of supply here. If we kind of just look at this chart, is this a chart telling you to go long? I mean, Apple has not made a new high, or put in a higher low in quite some time now. The market is trending down. The triple Qs are trending down. This is a bear market. We do have more room to go. The triple Qs can actually get down into the, mid 280s, if not 270s. By the time this is all said and done. And perhaps, if they really want to get aggressive going into the summertime, 260 on the triple Qs. So with that being said, I'm not really looking to get long on Apple, anything under 146 and a half. And the next short position here is going to be below 140. And I'm going to show you where the next measured potential is. And actually to find that, we have to go all the way to the weekly time frame. If we kind of look at the weekly time frame here, okay, and we kind of see, where exactly do we have room to go? We can see this 137 is going to be the 100-day simple moving average on the weekly time frame, guys. Now, does it make sense, a whole lot of sense, for Apple to just kind of stop dead in its tracks here in the middle of supply and the middle of demand. It makes no sense that Apple have some sort of reversal candlestick that takes it back up here, just floating in space. Normally, these things are going to come to an area of demand. They're going to chop around and then give you that move higher. Now, let's say that Apple never test 137. Let's just play fairy tale land here. Let's say Apple never tests 137 and then it bounces and it gets back into 155, 165, and you come back and you say, well, I thought you said it was going to 137. Well, we're going to know that this level did not get validated if we get some consolidation. So if we kind of go back here some time here and we see anytime that Apple's cracked major levels of support, we kind of came down into the 50-day moving average here as well as here. And this is a good case in point where we never touched the 50-day moving average here, we never touched the 50-day moving average here, we never touched the 50-day moving average here. However, we did have bounces on each one of those little bit of reversals. So in this case here, could we not touch 137, continue to go sideways and then higher? Yes, but what we're going to see is what we need to see is a slow rounding out process. For example, look at these lows here. We had 1, 2, 3 weeks worth of sideways consolidation before it popped. Look at this low here. We had 1, 2, and then by the third, fourth week is when we popped. Look at this week here. We had the low. We had 1, 2, 3 weeks before it's finally started to get on its run. So if Apple is going to prove to us that it's going to stop in the middle of no man's land without touching this support down here, what it's going to need to do is have at least 1, 2, 3 weeks worth of sideways upwards momentum before it starts to pop higher, if that makes sense. And also you can see here, this is a little bit different scenario because it was not underneath so many levels of supply. Versus here, we are underneath all of these levels of supply. So it's going to be a little bit more work here. Here, we just kind of came down to the 20, lost it, and then reclaimed it. Here, we kind of came down to the 20, lost it, and reclaimed the 5 and the 10. Same thing here. We lost the 20 and we reclaimed the 5 and the 10. But in the case that we're in now, we are so far extended from the 5, 10, and 20-day moving averages that we're going to need at least 3 or 4 weeks to even get back up into this zone. The last thing that you want to see if you're a bull is a V-shaped recovery. That's the last thing. So I understand we're getting close to some sort of relief bounce and some sort of dead cat bounce. But even on that, the last thing that we want to see is a V-shaped recovery. If we V-shape recovery and come all the way back up to the 20-day moving average, that is just a bigger sign telling you that more than likely we will probably be rejected here. And this next washout could be catastrophic and really take us into the summertime, if not fall time. I just want to kind of bring that to your attention, some things to kind of notice and look for. Shorter term here, we do have room to 137 on Apple. The upper bounce on the dead cat does take us back into the 150s. Just kind of be mindful of that. There's a whole lot of supply on the smaller time frames in between. If we can kind of see the daily chart is super extended here, kind of a little bit of an indecision candle here. So if tomorrow or next week we do decide to go on a little dead cat rally, what we're going to need to do is start with taking out 142.74 and then obviously get back over 146. Over 146, I would say that would be a pretty solid dead cat bounce back into 150. That's a nice little play there from 146, 147 into 150. So just kind of hang tight and wait for that. But just understand that, just because we might get a little bounce here. Why did my color do that? Just because we get a little bounce here does not mean that if we get some dead cat bounce that looks like this, everyone gets excited and they say, I told you guys, this is the bottom. And then we have some sort of stalling out period here around the 200 or the 50-day moving average and then come crashing all the way back down. Market can do that as well. Realistically, to kind of say, that like a lot of people like to try to call the bottoms on one green day or on 2 green days or on a dead cat bounce, that takes 1 week. A lot of people like to say, that's the bottom. I told you guys. Apple is really not out of the woods until it reclaims its 50-day moving average. And the 50-day moving average right now is sitting at 164. Realistically, I would like to see it get over 167 and then kind of do something like this, where it gets over that and then kind of back test and then goes sideways for maybe a week and then pushes higher. To me, I would be looking here and here to start saying that, hey, you know what, guys, let's sit around the round table. And, you know, maybe this was the bottom. Maybe that nice gap down that we had was the bottom. So again, do not start calling bottoms just because, you know, we get 1 or 2 days. You know, realistically, it's going to take a while, right? Before we can say, hey, you know what? That was the bottom here, guys. You know, and it's like, yeah, I should have got in here, but you know what? You didn't know that. The last thing you want to do is buy here because you think it's the bottom, have this bounce, and then correct on you and rip your face off. So you know what? If you want to play light and you do want to dabble in down here and try to time the bottom, sure, you can dabble in. Just use 140 as your stop. That's it. Make it very clean and simple. 140 is your stop. As long as we are trading over 140, you can continue to ride this higher. And if we do manage to get all the way back up here, who is better than you? Guys, do me a favor, subscribe to the YouTube channel. Also join my Discord. That link is down in the description box below. And I'll see you guys all in the next one.